So ILAS stands for Intelligent Lending as a Service. It's a SaaS model platform that we are offering to the lending industry. We believe it's transforming the procedures and the processes in the entire industry because it fully integrates paytech with fintech. On the fintech side of things, we are a good platform, like there are other platforms out there offering loan management, onboarding, automatic onboarding, KYC, AML, compliance checks, and what have you. It does that in a standard and good format, and it integrates with any other existing portfolio management systems out there. The beauty of us and the unique selling proposition is that we have a fully embedded paytech solution. What does that mean? That means that when an invoice is purchased, you don't have to go offline onto an online banking, have your treasury, make a payment, wait for a code, go back to your fintech loan software, put the amount in, where there can be human error because you can make mistakes on currencies, on jurisdictions, on invoice numbers, and what have you. The fully embedded paytech solutions means that we are automating this procedure. Cash movement is automatic. There's total control and smart contracts that make sure that mistakes cannot occur and that any potential fraud is totally avoided. So the consequence, the beauty of this full integration between paytech and fintech means real-time reconciliation. There's a purchase of an invoice and the transfer of that value in real time. That means there's no time gap. There's no human intervention. And that means that our platform can allow you to go to your banks or to your lenders and show real-time data, which means it's scalable, it's flexible, and it's much more precise. And that's what we're offering as ILAS, the Intelligent Lending as a Service platform.
So that's a good question. There are a lot of wonderful fintech platforms out there that deal with securitization and all types of different solutions, primarily business analytics. The most obvious, I think, difference between us and other fintechs, especially things such as portfolio managers, is we deal with prevention as opposed to cure. And what I mean by that is a business analytics platform like a portfolio management suite will deal with statistics and analytics. There may be certain rules that a lender may need to enforce, such as jurisdiction, such as invoice limits, and so on. A portfolio management system may give you data modeling that may tell you after the month is over that something has gone wrong. Whereas with our system, we actually control the cash flow. And so what that means is that we've got onboarding for lenders and SPVs. And a practical example of that would be a lender onboards with us, and then an originator, for example, onboards with us. That cash flow between the lender, the originator, and the person who is actually receiving the business that is receiving the money, the borrower, is all transparent through our system. And that allows us to perform automatic reconciliation upon funding. So the primary difference is that we actually control the cash. So the lender comes in, they onboard with us, they set the rules, they have a real digital account with real cash, so real fiat. It's no blockchain or anything intricate like that. It's legitimate digital accounts in their name, so their beneficiary name. The transfer occurs, the funding occurs, the money moves, and then the associated short-term asset, for example, an invoice, is associated in real time. So the operational overhead is diminished quite significantly, not just for the lender, but also for the originator. We have portals for both of those as well. So it enforces the rules, but it also mitigates the risk of audits because it's real-time reconciliation. It associates that asset. And not just reconciliation on payout, because a lot of other fintechs will talk about reconciliation, but they typically leave out pay in. And that's where our strength is as well. So when a debtor pays back, all of the distribution of fees that are owed, overdue interest, retained interest, all of these fees, they're automatically distributed in real time and reconciled in real time. And that's really one of the greatest strengths of our system that I don't really see anyone else doing in the market at the moment.
So our target clients actually are any fintech company that is out there, which is into B2B segment, because we are not a competitor to anyone. We are a partner, and whatever services they are missing in their suite of services, that is where we plug in. Target customers would be lenders, borrowers, originators, securitization companies, CLOs, everybody is our partner. So our target clients would be wherever they need any service to onboard the client, we're there. Because our platform is built as a modular service provider. So we can plug in wherever there is a gap. So if the lender needs just the KYC, we can provide just the KYC. As Lawrence mentioned, the Paytech is the unique selling proposition of ours, which is very easy and very critical for any lender. So if they just want our Paytech services, we will give them the Paytech services and the credit analysis. If the borrowers are looking for money, we have investors on our platform, so they can come on board. If the originators, they are lacking any Paytech solution or a lender or anything, we have a solution for them. So yes, so our clients are all fintech B2B platforms.
Portals for both of those as well. So it enforces the rules, but it also mitigates the risk of audits because it's real-time reconciliation. It associates that asset, and not just reconciliation on payout, because a lot of other fintechs will talk about reconciliation, but they typically leave out pay in, and that's where our strength is as well. So when a debtor pays back, all of the distribution of fees that are owed, overdue interest, retained interest, all of these fees, they're automatically distributed in real time and reconciled in real time. And that's really one of the greatest